Hey traders, Raghee here. Welcome to Charts and Coffee. Great to see everyone. Happy Friday. All right, so let's get to it. We've got a lot going on. We've had a lot going on this week. And, as I look back on the week for my own trading, when we see this sort of constant scheduling of the different FOMC members, yesterday we had an FOMC member plus the Treasury Secretary. I know intraday it's going to be a little bit more difficult to navigate those hot zones, especially when they're happening during those prime time hours for me as a day trader between 9:30 and 11:30. So it's definitely been challenging for me intraday. I'm looking forward to a much more FOMC free type week coming up. We know we've got the meeting in May 4, and we're very much expecting a half-point rate hike. And that means that the market's going to have plenty of time to discount that, but also plenty of time to worry about, how many more hikes are coming as the Federal Reserve is trying to basically out-hike inflation. And even with, say, a goal, like Bullard pointed out yesterday, of, say, 3.5%, that's not going to slow things down. So for those of you that are wondering, am I still playing the inflation trade? I absolutely am. Am I still pretty much not caring at all where the broader averages are going? Do I want to be basically free of, what's next for the NAS, or what's next for the Dow, or what's next for the S&P? 100%. If you checked out yesterday's free video, you know that I think there's a lot of very cool trends that are, as I kind of viewed them, hidden in plain sight. They're not the things most traders are going to talk about. And they're going to exist in the corners of Australia and Brazil and Canada. They're going to exist where we can break down an index into the individual sector, and then the sector into the individual stock. And that index sector stock approach, finding the outperformers within the ETFs, that is what I teach you all. That is what I specialize in. That is the way that we build watch lists. We do it old school. And I know a lot of you have been telling me, Rog, I've been doing that, and it makes so much sense. And it's making my life so much easier to be looking at a pretty familiar group of stocks week in and week out. And I completely agree. So with that being said, as always, this show is about your questions. So let's jump on in. Hey there, Julian. Can we take a look at this 6N? Love it. So 6N New Zealand dollar is not usually a super liquid ETF. New Zealand is a commodity or commodity export driven currency. You can also look at the, what is it, EW NZ? I'm trying to remember what the MSCI, what a mouthful, iShare is for New Zealand, but their main export is dairy products, milk, fat, etc. So definitely it's going to benefit from the inflationary trend that we're seeing. The New Zealand dollar itself, I'd probably say mainly because of the relationship back to the US dollar and the strength of the Australian dollar. And both of them tend to move pretty well together. RBA and the RBNZ, the Reserve Bank of Australia and the Reserve Bank of New Zealand, tend to have very similar monetary policy, although New Zealand will have much more abrupt shifts in monetary policy and action. But nonetheless, they tend to track very similarly. Both of their number one trading partners are China. So they're pretty similar. That being said, technically, I would say focus on the Aussie. But yeah, it's hard for me to say don't buy dips in the New Zealand. But the fact that it's still doing battle with the 200 would tell me, hey, be careful. But, clearly it is buyable. Thanks for the question. Thanks for the currency question, Julian. I appreciate it. Good stuff. All right, next up is, hey, RF, am I crazy to think CL could be making a bearish 1, 2, 3? No, no, not at all. Not at all. So let's take a look here. Zoom in a bit. Take a look at what we're dealing with. So let's grab the pattern here. Higher high to minor high to minor low. Retracement. Right, we're looking for a break, really, of this Darvis, and really of this. Gosh, I would even add the point of control in there. So there's your pattern. And the next question, and I don't know how long it's taking. The next question is, how long is it taking? And that might be the issue. Yeah, it's too big. It's a little big. So RF, I like my 1, 2, 3 reversals to be a little bit tighter than this. This is just simply taking too long. However, to your point, we have a neutral market, and if we are going to see a short, what the neutral market sans the 1, 2, 3 is going to create is not a short through the floor. I don't like to do that anyways, right? It's going to be a short off resistance. So what we want to do is wait for the market to trade up, I'd say really up into this area, not just the zone here, but likely that resistance up in here as well. I'd like to see it trade up into that area, and then I can look for a short sell. So I don't want to see a 1, 2, 3 is a momentum breakout pattern, or breakdown in the case of this particular setup. But what I love RF is this is a neutral environment. So that 1, 2, 3 is valid. But again, the length of it is what's problematic. And so what we typically see with a longer 1, 2, 3 is not that crisp 1, 2, 3, boom, break the floor or break the ceiling, follow through. Give me 1 second here, gang. 1 second. Sorry about that. Okay. So what we're going to get likely is more of a distribution back and forth. And that's where, we want to focus on, say, the slow stochastic happening in that neutral yellow trend, and then just play the overbought, oversold. And that does then, not to make things confusing, but that actually makes this area here down near the bottom, which would have been the 1, 2, 3 breakdown point, that actually makes this a bit of support, while this is that bit of resistance, right? So hopefully that makes sense, and that if you're thinking about what you would do down in this area now, it might be buy. It might be a low reading, low 20 reading on the slow stow at support, point of control below, and it actually might be a buy based on where we are. Now, as we move higher back up into the range, we hit a target, hit another target, and then in that area, we start thinking about fatigue and the market sinking back down into the range. So great question. Very cool question. And again, when they take too long, those 1, 2, 3s take too long, that momentum sharpness isn't going to be there. And we start to just treat it as if it is what it is. It's a distribution market environment. That's slow stochastic. That's overbought, oversold. So good stuff. Good stuff. All right, Alan, I got into BKR. Yeah, this was on our outperformance watch list. This was on our watch list where I pick apart the structure of the sectors, find the individual stocks within them. And BKR was one of the setups that was in there. You grabbed that. Okay, cool. How would I figure my first target? So I would actually focus on 37.40. And if you're going to see upside, it's likely going to be, we really need to take out, yeah, let's move this around. We really need to take out 36.40. So basically, you can see all that action in this area. So I'd keep an eye on that as resistance. That's going to be a little problematic. But then I would actually treat the 37.40 level up in here as your target. All right. But those are your two obstacles to the upside as we look at BKR trending higher. And that's a nice setup. We still have our COP trade. I've got a point of control overhead that we're going to have to duke it out with. So there's a number of setups in those corners of the market that we've talked about for really weeks and weeks and weeks, coming borderline months now, where we want to focus on XLE, we want to focus on OIH and XOP and those oil names as they pull back. So good stuff, Alan. Nice trade. And let's get some follow through out of that thing. It sure won't hurt. It sure won't hurt if we see some movement higher in crude, or at least crude holding its own, which takes us back to RF's question, which is if this is oversold and we're going to bounce higher, those oil stocks are going to benefit. So definitely gels there. So good stuff. Has XLRE and that sector come into play? Yes, this week, Joe. Yes, take a look. We're finally in this area looking at the green. See, we're definitely finally green market trend, which means buy the dip is valid. And then I would also say, to your point, it's very likely, and if you've done your homework the way I teach you all to crack those sectors open, you've already seen on the multi-charts that I share, or maybe just in the process of you're going through the outperformers within a sector. You know that one of the things that we consistently look for is, are there any individual stocks that are behaving in a way that's better than the sector? Is an individual boat looking better than the tide? And great eye, because PLD absolutely looks better than XLRE, and WELL looks even better than PLD. So you've got some stocks within that tide. You got some individual boats that I would actually focus on even more so than XLRE. Now, to your point, it's a whole lot easier when that sector is also cooperating. So I like well and PLD. They look great in their own right. But once XLRE or any of the stocks that are weighted within XLRE, when they start moving higher, right? Now this is Simon's Property Group. When they are not, the thing to remember is, well, do I look at XLRE? Do I want to be long XLRE? And are the stocks, or at least a number of weighted stocks within it, moving in that same way? Now, what's interesting about XLRE, Joe, is that we've had a short position in XHB now for the better part of over a week. It's a pretty established trend for us. Actually, gosh, is it really almost coming up in a few weeks? Wow, gosh, time does fly. So it's interesting that when I look at XHB and ITB, I'm still looking at short the rip. But XLRE, especially those names that you mentioned, yeah, those look really, really good. Those look really, really good. I mentioned I just saw that there. Not as good as well in PLD. Yeah, good stuff. All right, moving on to, hang on. Next question. Hang on. The rates, sure. So the question is, forgot the Fed interest rate. Sure, it's Google CME FedWatch FEDWATCH tool, FedWatch tool, and it'll bring you up the target rate probabilities chart. That's the one. CME FedWatch tool. All right, next up, Greg asks, when looking at previous day ranges as it relates to current day trading, beginning an inside day, do I look at the previous day wicks or just the candle bodies? So if I'm looking at an inside day, it just has to be within the range, and the range would include the high and low. So if it's inside the open close, that's just even narrower. So there might be folks who define an inside day as a session that's trading within the candle body, but I don't know that I've seen that as a very common definition. To me, an inside day simply is within the range, and range would include that high low. So yes, the wicks would be included on what the range is, because that is what the range is. And then we would look at whether or not today's session is within that. Now, if you did want to have a slightly more defined or discerning way of looking at what the range is within an inside day, one thing you could do is look at volume. We talk a lot about volume in the room. We talk about, if I'm looking at, say, the S&P, I can look at intraday volume. I could look at 5-minute volume and just see where those ledges are, and maybe see if that further supports the previous session's high-low range, and whether there was actually some conviction, some opinion, some size near or at that higher low. So there's a lot of things we can do to add more depth to what is a surface level analysis. Price is always in the surface. It doesn't mean I don't mean surface as in shallow or not valuable. I mean surface as in just the top. And then below that, there's more and more and more. So price, volume, volatility, time, and the other three are going to be found under the surface. So price is what we see first. Then we want to say, well, what's behind that price? So good stuff. Mike R. All right, what do we got here? What would be targets on RTX and LMT? I am in both of these. So Mike, in our room, in our Sector Secrets Mastery, which I love, we have a very active community of traders talking to one another, setting up trades with one another. Even if there are trades that I'm not going to send out as an alert, they'll ask me, hey, Rog, do you like this? And this was one of the questions. One of our members said, Rog, do you like the potential for this trade? I said, hey, you've got a double green market pulling back into the wave. One of the main reasons that I would not send this out as an alert, and this is what I make clear to members, is it's a little on the spendy side, right? It's a little spendy. It's a little expensive. And so if we're going to scale in at an aggro, a moderate and a conservative level, this particular entry would have been a little bit out of reach for a lot of traders. But this is why I love having this this cooperative, positive, open chat within the Sector Secrets Mastery Room. We have a number of traders that are long RTX, and that's awesome. We're going to see a slightly higher high here today, but it follows the criteria of what we do. Follow the structure of the stock. Is that stock a relative outperformer within that sector? So good stuff. Target wise, I would say really yesterday's move to that 101.70 area was a good place to scale out, especially with a move like that. And then I'll be looking to about 103. 103 would be a great place to maybe start trailing a stop or scale out again. And then, of course, if we haven't scaled in or trailed, by the time we get to about 104, 104.20, we've got to do that by then. And again, what's the difference between a target? A target is an upside level. Think of it as a finish line. You cross the finish line. A trailing stop is more along the lines of protecting unrealized profit, and that is more akin to a safety net. So love that. Now, the other one was what? LMT. LMT, if you're long LMT, now, unlike RTX that just pulled back this week, LMT pulled back on March 29. But if you're in that one this morning, I would scale out. I would not get flat. A lot of traders get flat. We have a monster trade going on CCJ. We sent this out yesterday. We've only scaled out, right? We didn't get flat because what happens is when traders don't know, a lot of new traders don't know to scale in and scale out because it's really an old school thing. I know a lot of you probably say, yeah, Rog, I scale in and scale out. And if you're not doing it now, think about how you can include that in your approach, into your trading plan. We're not flat CCJ, so if it keeps going, we won't have to chase it at higher highs, which is what, unfortunately, Momo traders will be reduced to. We'll just scale out as the trade moves in our favor. So LMT is a really great example, sort of echoing where we are in CCJ right now, which is, scale out, pay yourself. Look at those candle bodies. Scale out, pay yourself, move the stop to break even, and then let's see how much higher is high. Enjoy the ride. Nicely done on that one. Yeah, good stuff, Mike. Very good stuff. Well done. Beautiful structure. If you bought the dips, absolutely great. The best way to manage risk, the best way to keep cost within, ideally giving you an edge is a directional debit, directional long call Trader, so beautiful. Very nice. Um, let's see. How do I display a tiled list of all? Oh, it's just a layout, Chuck. It's just a 12 chart layout within TOS. So it's just just like you can have 2, 3, 4, 5 chart layouts. It's just a layout. It's a custom layout. Right. Let's see. Next up, is the screen out of focus or is it my eyes? Lauren, I'm not sure. I am not sure what you all are seeing on your end. If it is blurry, I apologize, but I think we're streaming all right. We should be fine. I always, you know what I always do? If you're ever having issues, and I do this too. I do this in the room from time to time. If you're ever having issues with your internet, check your speed. See how the download's going right now. I know that upload and download is, we want to always know where we are. So I always try to check what my internet speed is doing, upload, download. And then I know if I'm seeing slower action on my platform, if I'm seeing slower action on a video, at least I can start to troubleshoot it. So that's how I like to do it. Yeah, we need to do these things, right? As traders, is our platform operating on the best highway of internet that we can give it? All right. So, gang, as always, gosh, that 20 minutes flies by. As always, thank you so much for joining us for Charts and Coffee. Caffeinate and dominate. It's been another great week with you all in the mastery here in the Charts and Coffee show, in the futures room and the options room. So thank you for being a part of our simpler trading community. Remember, I will see you all for our Ask Me Anything session, which is now a 90-minute session. So I'll see all you in the futures room and in the Sector Secrets Mastery at 2:30 Eastern today. So we have a 90-minute Ask Me Anything. Think of it as Charts and Coffee on steroids. So if you haven't joined me yet in one of those services, please do. I would love to see you there. And in the meanwhile, our next show right here at the Simpler Trading YouTube channel is our Sunday Notes. If you are looking for a great way to kick off the week, that is it. 6 p.m., 6 to 6:30 Sunday evening, right when those markets are opening. If you're a member of any of our simpler rooms, options, futures, my master, I send out my weekly notes. So you have my weekly plan. What am I looking at? What are the hot zones? What are the sectors that we're watching? What are some of the macroeconomic factors that I'm watching? I send out my notes to members each and every week. If you're a member, it's included in your membership. And so I'll see you there for that show. Gang, as always, be good to each other. I will see you all on Sunday, right? Okay, take care.